its dominance, BlackRock, the world's largest asset manager, says a declining dollar means you need more
What's up, guys?
international exposure. So Winston said to me, if you're holding all your wealth in US dollars and US stocks, you could be sitting on a ticking time bomb. That's what he just said. So your savings, your retirement, your purchasing power, they're all at risk. Now, by the end of this video, you'll understand exactly what's happening to the dollar, why it's happening, and the 4 strategic moves wealthy investors are making right now to protect and grow their wealth. This isn't about panic or doom and gloom. It's about being prepared and positioned. My name is Felix Preen. I'm an ex-investor banker. That was Winston there, most importantly. And I've seen how institutional banks work. I'm also the founder of the Goat Academy, where we've taught over 20,000 students and helping them to learn to invest like the pros. And I'm also the co-founder of TradeVision.io, where we analyze markets and investment opportunities daily. My mission is simple: teach regular investors like you the same strategy that the Wall Street guys use to find winning opportunities before the crowd does. And today I'm going to break down what's really happening with the US dollar. No hype, no fear-mongering, just facts. I'll show you the 4 asset classes that wealthy institutions and investors are moving into right now. And I explain how you can position yourself strategically, whether you have $1,000 or $1 million to invest. The US dollar became the world's reserve currency on the back end of World War II in 1944, and this move made America the world's economic superpower. One of the key reasons the world trusted the dollar, it was backed by physical gold. Now here's how the system works. The US government generates revenue from taxes, which you may be paying. They then spend that money on healthcare, welfare, infrastructure, military, sort of everything the government does. But here's the problem. The US does not run a balanced budget. The government spends way more than it takes in through taxes. So where does the extra money come from? The government borrows from people like you and me through treasury bonds. We lend money to the government in exchange for interest. But they also borrow from foreign countries. Countries around the world lend money to the US government because they trust it. They want to be paid back with interest though. And then you have the Federal Reserve, which basically just prints money. If the government can't get enough money from regular people like you and me and foreign governments, they go to the Federal Reserve. The Fed then just hits the money printer and gives the government that money as a loan. Now here's something wild. The Federal Reserve isn't actually federal. It says so on their website, check it out. They're not a bank because you can't deposit money there. They are not a reserve because they don't sit on cash reserves. But they have the ability to create money out of thin air. Now when the US dollars were backed by physical gold, there was a limit on how much money the Fed could print. Why? Because to print more dollars, well, they needed more wealth, more collateral. And that collateral was physical gold. This gold-backed money helped preserve the value of the dollar, but it also slowed down economic growth because the US economy runs on what? Spending, yes. The more money you spend, the more money somebody else makes. And the largest spender in the US economy isn't Amazon, Tesla, or you and me. It's the US government. So when the government spends more on infrastructure, research, contracts, that money goes into businesses' pockets and then into investors' pockets. But imagine if the government could just print money out of thin air with no limits. By the early 1970s, the US government had borrowed so much money, not just from the Fed, but from countries around the world. Foreign countries started getting concerned about America's ability to pay back that debt. So these countries said, you know what, keep the dollars, just give us back all our physical gold. Gold levels in the US started dropping because everyone who'd lent the US money wanted their gold back. And that's when President Richard Nixon made a historic move. He severed the tie between the US dollar and physical gold. And here's what Nixon said: I've directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold. Notice the word temporarily. Well, there we are 54 years later, and the dollar is still not tied back to physical gold. And this move started creating concerns about inflation, because if you can just print money out of thin air, and that money isn't backed by anything, it's just backed by a promise that the US government has value, it's backed by a promise the government will continue to pay its bills, well, the dollar was still the world's reserve currency, but people started getting concerned about its value and inflation. Those concerns were relatively quiet after the 70s until 2008. And if you're wondering, Felix, what stocks should I be investing in right now? You need to understand what's happening so you can make better decisions. That's kind of...
Okay. I like the style. Let's jump into a little breakdown here on Lemonade Insurance. So, should be fun. Okay. Trying to be very cognizant of titling here. Let's see. LMND. Okay. Wednesday, 11/5. And we'll play Felix for a little bit.
The key part here. But if you're impatient, then I'd say to you, come and join me. Leave this video right now and join me for a live training where I will actually teach you how Wall Street finds those great stocks. And you can do that by signing up at felixfriends.org/training. And the link is down below in the description. And then you don't need a history lesson here because maybe you haven't got the patience for that, but you need the skills. I'll give you the skills in that separate live session that we're going to run on Tuesday evening. Now, after the housing market crashed in 2008, the economy was in freefall. So the Fed unleashed something called quantitative easing. It's a fancy word for saying we're going to print $1 trillion out of thin air and inject it into the economy. So the Federal Reserve printed more money and gave it to the US government. The government then spent that money hiring people, building contracts, giving money to businesses to keep the economy moving, bailing out the occasional bank because, bankers they really need it. And then after that quantitative easing starting in 2008, people got concerned about the value of the dollar again. Because if you can just print money out of thin air, what is the real value of the dollar? It's a valid argument.
Okay.
You can print money. Why do we have to pay taxes? Why do we have to work for money? You can just print it, right? Now, by 2012, it looked like things were okay again. The economy started moving again. The dollar was still strong, and concerns around the dollar started calming down a little bit. And then 2020 came, and things got flipped upside down again. When the pandemic hit in 2020, the economy shut down. The stock market saw its fastest sell-off since the Great Depression, and that's when the Fed started printing money again. Now this time, they didn't call it quantitative easing, but it's essentially the same thing. It's estimated the Fed printed around $5 trillion to stimulate the economy. Now it's hard for our brains to process how much $5 trillion really is. Let me help you understand it. In 2019, it took 300 million Americans working for 1 year to produce about 21 trillion of...
All right, I think we're ready to go here. This one stock could change early buyers' lives. This is not financial advice, and you do want to do your own research. However, I think it's possibly a great idea to buy as much as you can before November 10th. Lemonade is the stock, LMND. They just came out with earnings, and the earnings reaction is very good. Let's jump into a little breakdown and get started here.
Sam Putnam. This is Sam Putnam. This is Sam Putnam.
Got some lighting problems, everyone. Sorry about that. We're going to have to redo that. Oh my gosh. That was hard. It's all right. We can also talk a little bit about what their earnings actually were, huh? Wouldn't that be useful? Can we do that? Q3 2025 earnings. You can see what I'm looking at. I'm looking at ChatGPT over here. Surely we can grab that from today, right? Blah, 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 blah. Here we go. Revenue is up 40% year over year, and a significantly smaller loss. All right. Here we go. Oh, I wasn't even showing what I was doing after the whole time. Sorry. If you're on YouTube, you can ask questions over there and comments. We can engage. This one stock could change early buyers' lives. This is not financial advice, but some analysts would agree that it's wise to buy as much as you can before November 10th. The company is Lemonade, LMND is the ticker. They're an insurance marketing company. I'm not sure they'd like to be called a marketing company, but they get a portion of premiums of people who sign up through their platform. And they run a lot of ads. Their revenue is up 40% year over year. Their earnings is still a loss, but it beat consensus estimates. Their profit margin is up to 40% now. This company is a unicorn, venture-backed company that is rounding the corner as a real publicly traded, could be the next Geico. Not financial advice, but let's jump into some info.
This is Sam Putnam.
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 So this is Lemonade. So this is their revenue, almost $200 million, up 40%. And they also grew customer base users 25% almost year over year. So this is pretty awesome. I don't know what a gross loss ratio is, but it sounds good for that to be low. They did raise guidance as well, okay, above previous consensus. So if we look at the earnings reaction, we can see all that. We can see the raised guidance. We can see the AMD. I was so excited about how AMD was bouncing on this earnings reaction. Look at this Lemonade sort of, very tall candle here. So this thing is straight up. And the earnings per share is, again, beat the estimate. So still a loss. Revenue's up and the guidance is up. And this is what happens when you have those three factors, a giant move. Now, it doesn't always happen that way, okay? And for that reason, I don't usually recommend you just, wait for earnings and then just pile in. Usually, what I think is a good idea is you wait for this candle to close. Because if you look at, and it's about to close, by the way, you can see I'm recording this video about 45 minutes before the close. If you look at some other stocks, look at Microsoft. This thing was expected to do awesome because they beat on earnings per share. They also had that clarification of their OpenAI ChatGPT equity of about 25% of ChatGPT they own. So they flipped, $1 billion. They're going to ultimately, it might be more like 10 to 15 billion that they're going to end up spending. But in turn, they're getting a stake in OpenAI worth over $100+ billion. So not bad, 10x, right? And despite all that seemingly good news that they got that equity stake done with corporate development, the stock is down. So, I'm not one to say I'm smarter than the market, which is everyone who has an idea that, maybe they hold Microsoft from down here, or, maybe they bought it down here, whatever. Maybe they bought it up here and they got a little spike and they were like, you know what? This is the spike I can finally unload my Microsoft into. And now it's down, even though the news is good, right? Sell the news. So all that to say, when Lemonade has these awesome earnings guidance. Well, the earnings are better than expected anyway. Solid revenue growth. I like to say, you know what? Let's wait for this thing to close. I know looking at these intraday candles is all disorienting, but it just gives a little look at, there's the close, okay? 78. And we're getting there. I think it's going to close right about there unless something crazy happens. So that's a level that you can risk off of. And if you look at a 5-year chart, they're in the stratosphere, right? I mean, there is 2021 and all that, but pretty much ignore that until, it gets up to a major level like 115, because this was all crazy stimmy check time. So this is the setup. Awesome volume, high volume close about to happen, and we'll see what happens. There could be some profit taking tomorrow, but that's why you set a stop, or you don't want to buy it tomorrow, fine. If it gaps down tomorrow, let it be, see if it can close, slightly above that high volume close the next day, and then buy it the next day. And just to say what that would look like, let's see if we can think of one like Tesla. You know what? You probably didn't want to buy Tesla here. Maybe you thought here, I'll buy it here. And then what did it do? It gapped down. So fine, just don't touch it. Maybe you buy it here, maybe you don't. And then maybe you buy it up here, okay? And still risk this level. Maybe you get it down here. I don't know, but the point is, if there's a earnings candle with some volume on it, that tends to hold, and you can kind of look and see that that's kind of the case, right? I mean, it's not exact, but there's definitely something going on there psychologically, which means, how people act, how people buy and sell is with their brains, right? That's all I mean by psychologically, nothing special. So anyway, that's enough charts for now. Lemonade, this is obviously the story, turnaround story. And this is hard. They're underwriting insurance policies for random people off the internet. So yeah, we'll see what happens. There is some risk, but it's definitely a massive, massive industry. And they are AI powered. Okay, so everyone's throwing AI in front of their name, but in terms of coming up with an insurance rate for someone, there are literally the smartest people in the world working on these problems. I've met them. Oh my God. And the salaries are massive, similar to quant, similar to big tech, AI researchers. There's a lot of money in saying, oh, I'll use a different example so I don't get myself in trouble, or get them in trouble. They didn't tell me anything inside baseball, but, there's been hurricanes in this piece of Florida every single year. Maybe your hurricane insurance is going to be a little more expensive. There's simple stuff like that. And then there's using models to sort of obfuscate a whole bunch of variables, not purposefully, but that's kind of what happens. And then come up with a rate that actually saves the company money, but also is low for folks that don't, have high risk. So, yeah, it's a real market. And them being a venture-backed startup definitely checks out as to actually using AI. So that's the idea. Lemonade, LMND. I'm not here to just sing their praises. That's one idea of many. If you like this video, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I put that in the post section. I did put out a post today as well. YouTube is cracking down on AI channels and channels that it's AI. It uses AI as well to label channels as dangerous. So we did get a warning. So check out that link in the first part of the description to join a free group, so you can get these videos even if YouTube removes this channel. It's on school. SKOOL. It's a community platform like YouTube. Check that out. And if you want one-on-one help, head over to stockscommunity.com and we can talk there as early as tomorrow morning in the Discord. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, let's jump back to Felix here.
Of wealth. The US economy was about $21 trillion large. So when the Fed printed about a quarter of that with their magic button, think about that. 300 million people working a full year versus a button. And this new money printing got many people very, very concerned about the dollar again. But interestingly, during the same time, many economists were saying, no, all this money printing is not going to cause inflation. Now, I don't know if those people were just like thick, high, or paid, but inflation did happen. And that's when interest rates went up. So when we started seeing inflation in 2021, the Fed said it's a transitory problem, as in a temporary problem. Now here we are, 2025, 5 years later, after all that money printing, and we're still dealing with inflation. So let's recap where we are. 5 years after the pandemic money printing machine, nearly 2 decades after the 2008 money printing, about 5 decades after Nixon took us temporarily off the gold standard, and 81 years after the US became the world's reserve currency, and people are starting to get more concerned about the value and the health of the dollar. Now we're seeing major institutions and publications raising red flags. You've got the lefty lobbies of the British press saying the question isn't if, but when the dollar loses its supremacy. JP Morgan, probably someone worth listening to. Can you hear my cat back there making a racket? De-dollarization is underway. And BlackRock, the guys with all the money, they're saying Bitcoin could replace the dollar. They're literally the world's largest asset manager, and they say a declining dollar means investors need to change what they're doing. This one's getting concerned about her dollar assets. But yeah, the CEO of BlackRock recently did an interview where he said the US dollar could be replaced by Bitcoin because of all the national debt. These are not random YouTubers or conspiracy theories. These are the biggest financial institutions in the world. This is Sabrina, by the way. Now, they're not saying the dollar will collapse tomorrow, but they are saying the dollar's dominance is being questioned for the first time in decades. So what does it actually mean for you? Well, first of all, don't panic. But now that you understand what's going on, let's talk about what this actually really means. Now, does this mean you should come to a rash conclusion? No. Does this mean the dollar is going to crash tomorrow? No. It means you need to understand strategically how to allocate your money. Now, for full transparency and full disclaimer, I still think the US is the best place to be and the best place to invest. But we can start to study what some of the rich people, the wealthy institutions, the big banks are doing to diversify themselves, because we can learn from others. And that's always the way I've learned from mentors who are more successful than me. So my team and I have been studying, that's Sabrina and Winston, some of the largest asset managers and investment institutions in the world, and we saw a theme. There are 4 places that investors are looking to diversify their money if they have concerns about the dollar. Those 4 places are, number 1, physical gold, number 2, real estate, number 3, foreign stuff, and number 4, Bitcoin. So let me break down each one so you understand the opportunities and the risks. Now, none of this is financial advice. I'm not telling you what to do. My hope is that you come away here with a heck of a lot better understanding than you started off with. And if you then want to take it further, go and join me live at felixfranzadog/training on Tuesday night. Starting with physical gold. It takes time, effort, and labor to mine physical gold. There is a limited supply of physical gold in the world, and gold has been the historic form of money for literally thousands of years. And that's why some investors who are concerned about the dollar and inflation will buy gold. And I agree with them. Another reason gold prices have been booming over the last few years is that the BRICS nations, that stands for Brazil, Russia, India, China, and South Africa, these countries have been working to potentially move away from the US dollar and create their own currency that could be backed by physical gold. They've also seen that they are buying less US dollar debt and instead just buying gold because they can lock it up in their own safe. But I want you to understand, nothing goes up in a straight line, including physical gold. And I'm telling you, this is somebody who likes his gold exposure. I'm bullish on it in the long term, but we might see a little bit of a wobble over the short term. At least that's my perspective. Now, gold prices boomed after the 2008 crash because everybody was concerned about the dollar. So people looked for ways to protect themselves. And by 2012, it became clear that the dollar was, well, sort of safe-ish, or people had forgotten about 2008. And people didn't want a safe investment anymore. They wanted to make higher returns. So they dumped gold and they went back to normal investing. And then gold prices fell from 2012 through to 2013, 2014, 2015, 2016, all the way to 2020. And it took 8 years for gold prices to recover after 2012.
Gold doesn't look good to buy right now.
I think about gold. And I'm not a financial advisor. I can't tell you what to do. If I buy, say, $10,000 of gold, I don't really look at it as an investment. I look at it as that it will be worth more than $10,000 of cash because inflation will undermine the cash value. So the gold will have more buying power in the future because of inflation. That's my thought. But bear in mind, gold goes down when people feel confident about the economy and they want to be, in robots or AI or whatever again. Now, the second piece where we're seeing a lot of money flowing is physical real estate. I like real estate, and here's why. Unlike gold, real estate can produce an income, and therefore it has real value. Real estate is a hard asset, something you can see, feel, and touch. And when you own real estate,
My
you
poll in
own
the
bricks,
Discord.
the land, the windows, and so on.
That's
Whereas
what that sound
with
was.
physical gold, it's just sitting there looking back at you, producing no income. So real estate can work for you and actually generate an income, and that's the advantage. Now, if the value of the dollar goes down, the price of real estate would likely go up along with rental prices. And hypothetically, worst case scenario, and I'm not saying this is going to happen, but stick with me for this example, if the dollar were to collapse, which I don't think is going to happen on an extreme level, it'll be gradual, and the currency became worth nothing, you could charge, say people started trading in chickens, you could then charge rent in chickens instead of the US dollar, because that real estate still has value you can exchange for whatever form of money or new currency exists, right? Now, it might be Bitcoin rather than chickens, so it might be a little bit more practical, but that is why real estate is powerful. It's a physical asset, produces income, it hedges against inflation, and it has real utility. People need places to live and work. Now, thirdly, foreign businesses. So instead of investing your money only into US companies, which are heavily affected by the US dollar, some investment institutions have been looking at foreign companies and foreign stocks. Now, investing in different economies can be difficult, especially if we don't know how they actually work and what their regulations and taxes are and so on. But there are much simpler ways by using the US stock market to get exposure to funds that give you ownership in those foreign companies. And you can do that through ETFs, exchange-traded funds. Now, before I continue, I am not telling you what to invest in. Investing has...
Okay, I'm not telling you what to invest in either. I do think this is an interesting idea. Carpenter Technology. They're a steel provider. So, yeah. Why is it a good buy? Maybe ChatGPT can give us some angles here. That was a really dumb question. Although, actually, there's some stuff. There's some stuff. Alright, this is getting weird. Carpenter is not just a generic steel supplier. It has markets. They are connected to some of these similar companies. ATI is one, I think, that is doing awesome, right? Sold off a little bit. STLD is another one. STLD. Oh, God. Thinkorswim. Schwab. Trash. All right. Let's see what we can do here. Okay, Carpenter ticker. Any connection to Trump? Okay. Any major public figures or entities? That's all we need to know. Yes. Oh. I don't know these people. CEO of Lenovo. I was expecting like Nicki Minaj or something. Okay. We'll just work with what we got here. Carpenter. Actually, this could be good if we go down into what they're telling us here. Electrification, increased defense spending, and record demand for power generation materials. Okay. Stock can change early buyers' lives. Carpenter is what? Stock will surprise everyone. Okay. This stock will surprise everyone. They just shocked the market with a very positive earnings. This isn't financial advice, but some analysts would say it's a good idea to buy $50 of this before November 10th. So this week is make or break for Carpenter, ticker symbol CRS. They're a steel and alloy supplier. There's a great demand for steel, given that it's extremely important and widely used for power generation materials. Defense spending is also increasing. That takes a lot of steel. And it's also used for medical devices, which Carpenter does provide steel for that, as well as for facilities like you would expect steel to be used for. So it's a cyclical market, but right now risk is on and the earnings are solid. So as far as a 1 to 3 month idea, CRS is the ticker. This isn't financial advice, but let's jump into a little bit about this company.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is CRS. These are the trends: electrification, manufacturing, increased defense spending, and here, record demand for power generation materials and increased electrification. So that includes electric vehicles. I don't know exactly if that's totally checks out, but it certainly sounds like something electrically related is going to use a lot of metal materials. So we'll see. But this Saudi resource seems to think that that's the case. So I don't know, but they're definitely gung-ho about momentum for Carpenter. Now, this is the earnings reaction. And importantly, you can know nothing about this company and say, whoa, something is happening right here around $304, right? That's where this first candle closed. That's where it touched again. That's where it touched again. And now today we're having a good move. So as far as a level to risk off of, $304 has to be it. And on a 5-year chart, there's nothing, absolutely nothing, okay? We are in all-time highs, blue skies, and this could be a game-changing earnings. The earnings per share beat, and that reaction is significant. So let's get rid of this and say, what are some risks here? Well, these are their markets, right? Are they likely to all slow down at once? Probably not. Raw material costs, costs of nickel, cobalt, titanium. I don't know the futures for each of these, but if you were very all in on Carpenter, which I don't suggest that, but you could take a look at, I believe each of these have futures probably, just like, copper is HG. You can see the cost is going up a little, but not compared to previously. This was probably some sort of major world event. We don't have to go into that in detail because this setup is so clean. So it's low risk right now. And you can look at other steel companies. You can look at STLD, Steel Dynamics. As soon as this godforsaken horrible piece of software loads, which is also the best software in the world, which is why I use it, but it still takes so there we go, long to load. Definitely some moves upward, but as for recent earnings reaction, kind of getting back to where that reaction happened. So hopefully it'll hold this moving average if Carpenter is to be a good idea. And then as far as other steel companies, well, there are other ones. It's not like the most exciting sector. A lot of these companies are slow moving. And if we look into basically, there's just some people on the board. They obviously have people from legitimate companies like Lenovo, IBM, and Danaher sounds familiar, but I'm not going to ball. It sounds like the glass company. This is not like the AI sector, right? No one is jumping up and down saying this is going to be the next $1 trillion company. But it does offer the lowest risk to reward right now. And if we look at some of these other companies, these guys have their fingers in a lot of different verticals and also products. So they're pretty diversified. And I can't, in good faith, say, buying NVIDIA is a good idea right now when you have earnings in a week, right? That's crazy. AMD, I can't say to go buy that, even though semis are strong, because the earnings reaction was, well, frankly, a little bit confusing so far. Maybe it's a good buy over this level, but in terms of earnings reactions right now, there are some other ones that are forming to get today. DOCN, Lemonade, just talked about that, but Carpenter is definitely in the conversation, even though it had earnings already, because it's holding up after that earnings. Whereas some of these earnings reactions have sold off, right? Microsoft, even Google, some profit taking, although this looks pretty strong today off of this 10-day moving average. And of course, Meta, which might be a good buy down here, actually, for people who are more comfortable buying dips. I'm not always a dip buyer, but if you look back, there's definitely, some breakout potential that could happen again from some, demand that caused it to break out here as well. So, similar to if you saw this dip buying opportunity on the trade desk, this doesn't look like much, but this is 20% from, this dip down here. So it's not easy. I don't recommend it at all, actually. But some people who are very good at it, this is United Healthcare that Warren Buffett bought, can get away with buying those dips. I really shouldn't have even mentioned it because I'm, worried that people who are not advanced are going to start doing that. But yeah, that's basically the kind of thing that's working right now. That and earnings high volume closes, positive earnings. Breakouts are not really working. Here's one recently from LAES, semi breakout that is holding up. This is probably as good as a breakout I've seen hold up, but as you can see, it just looked like it was going to break out here, right? This is what was happening. And then, nope, faked out. Of course, that was the market crashing yesterday, which it doesn't look like much now. It got bought back up, but this was scary yesterday. If you were watching it at like 4 p.m., it's all the way back to Trump Chi times 2 weeks ago. So that's a lot of context, but that's why CRS is such a good buy, even when it's not the most exciting company in the world. If you like these ideas, hit that like button. If you want to get a free course on how to buy stocks before they go up, hit that subscribe. I put that on the YouTube posts once a month, so subscribers can get that. And if you want to make sure you continue getting access to these videos, even if YouTube comes out with some type of guideline violation, which it has to this channel within the last week, hit that first link. It's free.stockscommunity.com. You can go to that free community. And if you want to work one-on-one, go to stockscommunity.com. I'll see you in the next one, and I hope this helps. And by the way, the violation was not a big deal or anything. I just used a word I shouldn't have used. You know, it's very similar to the word wealthy.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right.
Risks, and you never are guaranteed to make your money back. In fact, you will likely lose money at some point. So make sure you do your own due diligence. Never just blindly follow a guy on YouTube, even if he has noisy cats. But there are ETFs out there that you can buy in the US that'll give you instant exposure to foreign economies. So I'm gonna give you a couple of examples, again, not telling you what to buy. One is VEA, ticker symbol is VEA. It's created by Vanguard, one of the largest investment institutions in the world, and it gives you exposure to developed economies outside the US. So these are the more established countries all around the world, and you can get exposure to those economies by investing in this fund, which owns stocks in those economies. An alternative is IEMG, which is created by iShares, again, a BlackRock, very large institution. This one invests into emerging stock markets. So we're talking about smaller economies, smaller countries that are growing. More risk for more potential return? Possibly, because not only could you see the companies grow, but the countries could also grow, which means, yes, you could see a potentially larger upside, but you're taking a lot more risk. It's not the same as the US economy. It's not as secure as the US economy. Right. Now, the fourth place is Bitcoin. Bitcoin is the newest asset class, really.
Bitcoin. All right. Let's see about this CCJ. I think they're connected to some big companies, but I'm not exactly sure. There was recent news about Westinghouse. Big deal. Big deal with Westinghouse. The U.S. government, there was a strategic partnership. Okay, so gonna be careful with this one, but there definitely was a connection here. Okay. Okay, let's try this. So, CCJ owns Westinghouse, the U.S. government, and just announced a strategic partnership to build at least 80 billion of new nuclear reactors using this reactor company. Okay. Here we go. Trump's uranium energy stocks will help you retire, help you get wealthy, make you money. This is not financial advice, and the returns, the income opportunity here is not guaranteed in any sense of the word. This ticker, CCJ, owns about half of Brookfield. The government just took initiative and created an $80 billion partnership with Brookfield to create a nuclear reactor technology to help big tech. I was going to say they took a stake, but they did not take a stake. They took a stake in Intel, but now they're being a little bit more opaque in helping support the power generation technologies of the next 5 years as we get into the 20 gigawatt required power to make OpenAI the $1 trillion company that it's going to become. So AI is the move, and it's all bubbling down to this company, CCJ, this uranium company, because you need that for nuclear. So let's jump into a little bit about CCJ.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is a little bit about the government, Trump's partnership to build at least 80 billion of new nuclear reactors using Westinghouse's reactor technology, which is owned almost half by Cameco, which is CCJ. So that's the connection. It's a pretty big deal connection. This date on here is October 28th. And if you look at CCJ, there it is, October 28th. Now, that sold off and came to this left side peak here. And then we have earnings happening right now. And as we speak, we're going to close in 10 minutes. And it looks like the close is kind of a nothing burger earnings reaction so far. So given it sold off yesterday and the day before, that was with the market and now is holding. It's not a bad earnings reaction. It's not a great earnings reaction, obviously. But what it does do is it creates this risk reward opportunity, literally from this $95 level that already existed here. And if we zoom out, of course, this is it. There's no history really. So flying by the seat of our pants now in all-time highs. And this government stake it's not a stake. I got to keep correcting myself. They're doing partnerships now. This government partnership is pretty unprecedented, large, $80 billion. Who would have thought? No nukes is no longer. So there's other uranium companies that are more growth stories, UEC, UUUU, TNN, and we can look at how those are performing right now. UEC was up a lot, so it's expected that this company is going to have a little bit of profit taking and start to come down to earth a little bit along with the quantum companies. I swear to God, Schwab, to their credit, is voting for Tesla's pay package, Elon's pay package. Not clear if there was some blowback, so that changed their mind or what, but maybe they'll also improve their software. So UEC down a little bit, UUUU down as well. So this earnings hopefully will start to turn up. And then DNN, the Canadian uranium miner, they sort of all look the same. So the only one that looks different really is CCJ, and that's because of this government partnership. So we've definitely got a trend going. We've also got a level to risk off of here. I'm not going to close this thing because I don't want to draw a flag, because that's not really what's going on. It's more like a moving average, opportunity. Not a buy the dip exactly, but you're buying off of this level. So you can buy the dip. I did mention Meta recently as a buy the dip opportunity, but I almost never mention those because I don't want you to get stuck in a situation where a stock just doesn't ever go up, which can happen. If we look at AEVA, let's say you were trying to buy the dip here, right? Like you say, hey, it went up here, and you just keep buying, and suddenly you've lost 80% of your investment. So I don't like those as ideas, but what I do like is clear levels. This is a clear level right here to buy off of, and also earnings just happened, so you don't have to worry about earnings reactions. It's already reacted. It started to react, and now it's going to close in just 8 minutes as of the time of recording this video. So this is a very clear level, 95 and change, I guess you could say, to buy off of. So that's the technicals, which if you want to be right, then technically right is the best way to be right? But it's also good to say, why are you right? And for that reason, we can look at kind of what's going on here. We talked about the $80 billion nuclear deal. That's a very big deal. But also, if we just look at the actual earnings, we looked at some of the similar tickers already. Here's what's going on. They had adjusted net earnings of 30 million and adjusted earnings before all this stuff of 300 million. So, they must have bought a bunch of uranium processing equipment, or I don't know exactly what made, this almost $300 million in whatever this is, depreciation of equipment or what, tax, I don't know. Sales volumes fell a little bit, and then they updated guidance. Their share of uranium is going to be up to 10 million pounds, which is down a little bit due to some delays. So despite all of this, this major partnership still seems to be holding them up. And the price of uranium is which I don't remember how to look at it on Thinkorswim, but I will if you guys ask me about it. Basically, what's happened is the price of uranium has gone sideways this year, and yet all these uranium companies are up a ton because there's all this demand suddenly saying that nuclear is going to be the next big thing. And here's Oklo, the Sam Altman SPAC, showing that interest in nuclear that doesn't have revenue. It's up 1,200%. It's totally insane unless nuclear power plants start getting built at a rapid rate, and then suddenly it all makes sense. So it's definitely a long-term story, but it's a very near-term opportunity. So that's the level, that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube posts once a month. And if you want to make sure you get these videos, even if YouTube shuts us off, head over to free.stockscommunity.com. If you want to work one-on-one, go to stockscommunity.com. Not financial advice. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. What else we got going on here with the dollar?
Out there, this is something that was created to be a digital asset, kind of like physical gold. However, we've seen a lot of volatility with Bitcoin, which means it goes up and down a lot. And we've seen a lot of Bitcoin crashes over the last 10 or so years. Yes, people look at Bitcoin as the digital gold. People use Bitcoin as a way to protect themselves against inflation or the falling dollar. However, it hasn't been around the way gold has, thousands of years, or real estate has, thousands of years, or investing in stocks has, well, certainly hundreds of years. So Bitcoin comes with additional risk, more potential upside, more potential risk. And your job as an investor is to be able to manage the risk, manage the upside, and find the right investment opportunities for you. Now remember, even the CEO of BlackRock mentioned that Bitcoin could potentially replace the dollar because of the national debt. And that's a huge statement for somebody who manages the largest asset manager in the world. So it shows that Bitcoin is being taken seriously by the big boys. But here's the key thing. It's important for you not to panic, but to understand what's happening. A lot of people tend to get very emotional, and emotions are the enemy of profits. Any changes that happen are slow moving. By watching this video now, you're ahead of the vast majority of the population. And I want you to understand what's happening and be able to position yourself in a way that can capitalize on what's happening potentially. But the only way you can do that is by understanding how it creates the opportunities. So let's recap this briefly. The opportunities to get out of inflation in the dollar is gold, it's real estate, it's foreign stuff. If I could.
I need some foreign stuff in my portfolio. Light is connected to Apple. Apple is one of their customers. Hyperscaler data center operators. Okay. I can show you what we got going on here. Okay. Lumentum was selected as a key partner in NVIDIA's networking switches. Okay. Optical switching. So, this company is Titles. LIT. This one stock can change early buyers' lives. This is not financial advice, but some analysts would probably say that it's smart to buy as much as possible before November 10th. The stock is LITE. They do optical switching, and they have Apple as a customer. Their switches are also in NVIDIA chips. So there's major big tech connections here. And I don't know that you want to buy stocks right on the first day of earnings, always. But when the reaction's this good, it's probably a wise decision to take a look at it. Let's look at the price level. This isn't financial advice again, but just trying to be friendly with you too. Here we go.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's the reaction, and you can see this massive earnings date like this. We're closing right as we make this video, 4 o'clock on the dot. And this level is the place to risk off of, 233 and 46 cents if you want to be super persnickety about it. But if we look at this all-time high chart, we can see now is the time. We can look at a little bit of the company connections, including Apple and NVIDIA, but let's also jump into the earnings and what these guys do. So here's the recent earnings $400 million is up over 10% year over year. Did have a little bit of a loss when you do the kind of accounting that counts, I think. And yeah, this is their net income per share. So if we look at the earnings per share over here, we can see that beat, which is leading to that move up. And probably the guidance is strong too. Otherwise, it wouldn't move up that strongly, I think. Now, we can also look at its peers. COHR, Coherent, is another one with a good reaction so far. And then this choppy POS, AAOI, just channeling up. And it looks like the earnings reaction is yet to come out. But with those other two moving up, this one might move up as well. But you just got to be in the one that looks the cleanest. There's a level to come back if there's some profit taking. When you see this video, this is another level to buy off of 217. So what is actually going on? Well, here's their revenue, mostly from cloud and networking, aka the big tech hyperscalers, data centers. They need to connect all the GPUs, literally connect them, and they use light switching for that because it's very fast, the speed of light. And yeah, they beat consensus estimates in revenue, so that's pretty solid. Now, of course, they're in this big thing called the GDP of the country, the economy, where if AI doesn't turn out to be that great, all these companies are pretty much screwed. But maybe they just focus on something we do need, like some source of power that's not nuclear. Maybe we won't go into nuclear, but every sign seems to be pointing towards nuclear and tons of data centers that blanket the central US. So, yeah, that's good for Lumentum and good for us as investors. This is what they do, right? They do the lasers, the transceivers for these communications, all these little like electrical things that you'd think we could get from China, but instead we're getting from Lumentum. In fact, it's very possible we should probably double check. Do they make their switches in China? Because truth is, a lot of these companies do make their stuff in China anyway. Yeah, they have manufacturing operations in China, but they're headquartered in the US. So this is somewhat of a secure nationally company to invest in, okay? Of course, all of these companies, where does AMD manufacture? Where does NVIDIA manufacture? China? Actually, I think they manufacture in Taiwan. I think that's the whole point of why NVIDIA is worth so much. If we look at NVIDIA, yeah, they have TSMC is in Taiwan and then South Korea as well for Samsung. Yeah, so that's the whole point. NVIDIA is worth a ton. And if they're able to sell and distribute more heavily in China, then NVIDIA is going to be worth a lot more. But anyway, got off on a little tangent just talking about why it's okay to invest in China manufactured US companies. But this is light. They do have this loss. There's still some costs. But the performance of this vertical is super strong. And that seems to be championing the growth right now. So we'll see what happens as far as actual data center buildouts. But if we just look at essentially, is there going to be demand for cutting, welding, all that? Yes. 3D sensing, remote sensing, LiDAR for like cars, as well as any type of sensing technology like Internet of Things, stuff in your house. Facial recognition, if Palantir gets into that somehow in a sort of progressive manner. And then, yeah, medical and scientific instrumentation, they definitely need lasers and optical systems and all that jazz. So the revenue from this stuff is not a lot, but it could definitely grow. And it at least, whoa, I guess we're showing off my Windows Explorer for a second there. Sorry about that. This section could definitely grow, and it shows that they're not dead in the water if data centers don't take off. So LIT is the ticker. This is the chart. That's the place to buy it off of. If there's profit taking, there's another place to buy it off of. And if you like these videos, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube post section. And if you want to make sure you still get these videos, even if YouTube removes this channel, which I don't think they're going to do, but they have given the channel a strike on community guidelines. So I'm being a little bit careful here with how I word some of these ideas. This is not financial advice. All right, see you in the next one, but check those links below. It's free.stockscommunity.com, or you could join for one-on-one help for $25 at stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is a little more info about the dollar.
It's spelled foreign, you get the idea. Foreign. And then there is Bitcoin. Now, you could argue that being in highly profitable, solid American businesses, which could simply raise prices as the dollar keeps losing value, could be a place to be. And I think there is an argument to be made for that. But please, please, please do not invest out of fear. Invest out of strategy. The dollar isn't going to collapse tomorrow, but the landscape is changing, and those who understand what's happening and position themselves strategically will be the ones who are more likely to thrive. You want to learn how to spot the winning investment opportunities before the crowd does. If you want to understand how Wall Street analyzes stocks and builds their portfolios, then come and join me for the live training at felixschwenzer.com/training, and I'll teach it to you. It's free of charge. All you got to do is grab yourself a seat and be on time. If you got some value out of this, share it with a friend, and I wish you all the best. If you're sitting on cash right now, wondering where to invest this year,
Ooh, Christmas come early.
If you're sitting on cash right now, wondering where to invest this year, what I'm about to show you could be the difference between missing out and catching some of the biggest opportunities in tech.
Sorry, everybody. Healthcare.
Healthcare and AI infrastructure. Winston had to lay down, plus Rose and Tabitha did all the research for this, and they said to me that we had a critical moment. 4 stocks across booming industries are setting up for potentially explosive moves. That's what she just said. And while most investors are chasing the same overpriced
little
mega
dip
caps,
earnings reaction.
these 4 opportunities are flying under the radar, and Wall Street could be quietly accumulating. So by the end of this video, you know exactly which stocks I'm buying, why these industries could be exploding, and how you can position yourself before the Father Christmas rally. My name is Felix Spring, this is Rose, this is Tabitha. I'm an ex-investment banker who's seen how institutional money moves. I'm also the founder of the GOAT Academy with over 20,000 students learning to do better for themselves. I'm also the co-founder of Trade Vision, where we make the latest market news and data available to you. And my mission is to spend my retirement usefully to help you make better decisions, while this kitten seems to be on some sort of suicide mission off this desk. So we're going to break down 4 stocks across 4 different sectors: data storage, AI infrastructure, medical devices, and biotech. And these are unrandom picks. Each one is positioned in an industry that's experiencing massive tailwinds. I'm going to have to put Tabitha off the table here. She seems a little distressed. Now, this is not financial advice. I'm sharing my research from what I'm personally looking at. Always do your own due diligence and consult with, advisors and so on. You want to make decisions.
All right, let's jump into a little breakdown on A-Lab. Astera Labs. There is one stock that is about to skyrocket This is a semiconductor. Semiconductors are up 10% since October 1st. Incredible, as the market has gone up 1% during that time. So through all the Trump-Chi rare earths turmoil, even as the market rolled over the past few days after some gap ups, but still, it's impressive that this semi is up as well. This company is ALAB, Astera Labs, ALAB ticker symbol. And they, of course, collaborate with NVIDIA. So this is not financial advice, but let's look into why ALAB is the best of the semis to buy right now, right after earnings.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is a little bit about its collaboration to deliver connectivity for NVIDIA's one of their products. I don't know exactly what this product is, but it's got to be important because it's NVIDIA's, right? Of course, they have AMD and Intel as customers as well. And AI acceleration is really important. The faster you can make these chips work, the more you can get done. It all boils back to how fast ChatGPT provides a query response for you as an example. So yeah, they've been working with NVIDIA for a while, and they are all about power efficiency, which is really important. We need to build out a bunch of power to make all these GPUs work. And of course, ALAB is at the center of all of this. PCIe is the acronym. That rings a bell. Who knows exactly what they do, but as investors, we don't have to get caught in the acronyms. The benefit is we say, hey, this is the semi ETF. That's the 10% I'm talking about since October 1st. If you look at the market during that time, like, yeah, we've gone up a little bit, but it's not a lot. I mean, I guess it's more like 2%. What did I say? It was 1%. Yeah, so whatever it is, it's definitely a lot, but not actually a lot compared to an individual ETF. So ALAB, solid earnings. The reaction, is holding in there. Earnings per share is a beat. And it's at this sort of key level, which it held here. So it's not like a, falling life or anything like that, falling knife. This company has some life in it for sure. This is the level. There's the level again. And you can see that the moving averages, if it can get above this moving average, that's a big deal. So, here's another way to look at it. This is a little bit of a weird, just weird behavior the past few days, but this is largely the market, right? So that's why I'm a little less concerned with, see, the market the last 6 days has gone down. So pretty much all companies, this is AMD's reaction, see, very similar. So also a strong, an okay reaction given what the market did yesterday, which it doesn't look bad, when you look at it here, but at the time, this was pretty scary. We didn't know it was going to bounce, right? So this is what we knew. We knew that it went down from 680 all the way to 670, basically, in less than 24 hours. So we did get a bounce, but that was not known. That's only hindsight. So ALAB bouncing as well, and that earnings seeming like it's okay. So this is the idea. And then jumping into a little bit about that earnings and basically how they stack up to similar tickers. So Jeffrey's raising price target. That's not surprising, but that doesn't really help us invest because they always have high price targets on stuff. They had strong growth reports, revenue of 100 plus million, up 100% plus year over year. And yeah, they're in the center of this AI typhoon that's raising all the boats for sure. TSMC record profits, strong demands from NVIDIA. This is kind of the growth story. It's NVIDIA and all their cronies. Domestic chip manufacturing and supply chain resilience would be good. I don't know that ALAB themselves will be helped by that CHIPS Act unless they get some of that money, given, a lot of these companies still manufacture in other parts of the world, even if they have operations in the US. So that's a good one to just check on, because the deal, right, with NVIDIA and AMD was 10% of their revenue goes to the US government in exchange for basically allowing chips to be exported, and also I think they're getting some money from the CHIPS Act to build in the US. So all these are pretty much benefiting from the current administration. Yeah, they're in San Jose. And then they use these other partners. Taiwan is super important, but definitely no mention of China. So that's good. Maybe some contract manufacturers. I think at one point, NVIDIA was like selling its chips through Singapore or something. There was a big Singaporean order, and that had to be sort of ironed out as to why did Singapore need all these GPUs? And it turns out it's like, well, maybe they were actually going to China. So anyway, no manufacturing fabs in China. So probably I think it helps make this a safer investment rather than worrying about some sort of tensions like we were worrying about 2 weeks ago in the market. And then with Trump meeting with South Korean, he met with Xi in South Korea, the market still pulled back, even though they basically were all smiles after these sort of worrisome times. So things seem to be okay. ALAB seems to be the idea. The earnings seem to be okay. The context for the market seems to be okay. The collaboration with NVIDIA is definitely better than okay. It's an okay idea. And if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I'll post that in the YouTube posts once a month for subscribers. If you want to make sure you continue to get these videos, head to free.stockscommunity.com. You can join there. It's free, just to make sure that if we get cut off from YouTube, you still get these. That's why I'm being a little cautious. I did get a guideline strike from YouTube, probably for one of my titles. Well, definitely for one of my titles. So being a little bit more cautious. This is definitely not financial advice, but if you want one-on-one help for $25, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, jump back into a little bit
Based
of a
on
breakdown.
your rules and your framework and your risk, not what some guy and his cats on YouTube are looking at. If you want to get started on that, I will do one better for you even than these 4 stock picks, and I'm not going to hold you hostage. I'll tell you what the tickers are in a sec. I'll give you the 3 rules that Wall Street uses to find better stocks. And that's a separate video. It's 15 minutes long. I've compressed like literally a decade of knowledge into that, and you can get access to that at felixfriends.org/get free. And if you want to get all the details of all the stocks that we're looking at here, I'll also put a research report live in our private community on WOP, which is free, by the way. And you get access to tons of amazing stuff and tools and so on, plus, I don't know, 6, 7, 8,000 amazing people. And of course, Rose, she's also in there. She's, in charge of the whole thing. Now, what are the mega trends driving these stocks? The first trend is the AI data explosion. AI is eating the world, and I don't mean that as hype, I mean literally. Every AI model, every ChatGPT query, every autonomous vehicle, every smart device, they all need one thing: massive amounts of data storage. We're talking about data centers consuming 10 to 12% of all US electricity, growing at 20% per year. Now, it's also going to use 175 zettabytes of global data. Now, Winston wrote down a research note for me here that is apparently 175 trillion gigabytes, and that makes it somehow easier to comprehend. I still don't know what the heck that means, but it's a lot of data. That's what that means. Now, the second trend is cloud computing. It's accelerating the growth. Market is forecast to hit 738 billion, not by 2040, by 2025, like now. Companies are spending billions building this AI infrastructure. They're all racing to build more. It creates a massive opportunity in two areas. The companies storing all that data and the companies.
Okay. DigitalOcean. If you guys have any comments, drop those in the YouTube. Otherwise, we're going to tie things up here. It is time. There is one stock that is about to skyrocket. This is not financial advice, but the ticker is DOCN, DigitalOcean, and they do have a collaboration with NVIDIA. You can use their droplets to get access to NVIDIA GPUs, even as just a consumer user. So cloud computing expected to reach $740 billion just in 2025. The time is ripe for this industry to see the light of day. It's been 20 years in the making for AI to finally hit the enterprise, and DigitalOcean is at the center of it. Let's jump into a little breakdown. They just had earnings. Earnings per share beat.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a DigitalOcean NVIDIA connection. NVIDIA GPUs just provide acceleration, right? So anything that you're going to do big data wise, server rack wise, NVIDIA makes it faster, more parallelized. You can do more with less. And they also have this partnership with this sort of funny name, Hugging Face. But they're pretty fancy. They work with like Llama, Meta's open source LLMs that, Zuckerberg just spent like $100 billion on. So this is the company, DigitalOcean, DOCN. They are not competing head to head with AWS. So that's a good thing because Amazon Web Services is the juggernaut. They have been for a long time, and they proved that last week with the massive outages. Something like 15% or something of Fortune 500 companies had outages thanks to Amazon. So this is the company. That's the revenues result. You can see the earnings beat there. And it's actually at a really key level that earnings close. What do you know? Sometimes, people psychologically who bought up here, when the stock came back up, sold. So that's how this thing evens out. This isn't like, astrology or anything. These lines actually are how people react when they're losing or making money. And that same line is all the way back to January. This company's pretty much gone sideways for a while, but this is a pretty encouraging move here. And there's a lot of blue skies up above. If we look into a 20-year chart, we can see that, this thing is the story of all these companies where they went up a lot in 2021, and now they're starting to show signs of life. So a little bit more about DigitalOcean itself. They are basically like sort of neckbeard, like level 6 engineers in Silicon Valley's dream. They basically are the people that actually do the work at these companies. So they allow you to manage massive, like parallelized loads, clusters, balances, all of these jobs, cron. I'm just pretty much spitting out buzzwords at this point, but I don't know that you need to know exactly what they do, but the people who do need to know it are extremely good at it. And this company is the enterprise business version of all of that technology. So DOCN is the ticker. These are the earnings, 200 million. It's up 10% or more year over year. They did raise guidance, or revenue growth is solid. They got solid margins as well. It's not NVIDIA margins, but it's solid. And then, yeah, there are some risks. There's a lot of providers. Like if you want to go spin up a GPU, there's a lot of different places you can do it. I can't name them all. AWS comes to mind. Google Cloud comes to mind. Microsoft Azure that ChatGPT started on and is still using for now comes to mind. DigitalOcean, I guess, comes to mind. It wasn't at the tip of my tongue, but there's a lot of options, and hopefully these guys are really focused on small and medium businesses, startups, and developers, which is why maybe I'm not as familiar with them. So in the similar way that GitHub is like LinkedIn for software engineers, GitHub was so loved by these people that they got acquired by Microsoft for like $20+ billion. So it's kind of nice to have your customers like you rather than just the salespeople, decision makers, right? And DigitalOcean is in that bucket. They do virtual machines, so you can spin up a web app, app, whatever, to everyone who calls themselves a data analyst or data scientist ends up using one of these. And yeah, I don't know really what to say about this company except that it's a publicly traded company. They have customers everywhere. Of course, they are a software company, so that's how that works. And obviously, there's a little bit of hesitance with AWS, I'm sure, after last week, with that massive outage. I mean, it's like when CrowdStrike wipes out all the airlines and they have to cancel flights because the software security system goes down, which happened earlier this year. And I know really good developers who use a service to split loads across Google Cloud, across Azure. And then, of course, they're reliant on the thing that splits the loads. But all I'm saying is that developers love this. And if they love it, then ultimately what's going to happen is some big company is going to want it, because then they're going to acqui-hire all the people who work here, or use it just to get more employees excited to join their company because they want to work with technology that actually is functional and makes sense to them, which is a company like DigitalOcean. So this is the company. They are definitely powered by NVIDIA. Literally, you can probably search on DigitalOcean.com and select an NVIDIA GPU and get some sort of web app up this afternoon if you're into that sort of thing, and don't completely start crying when you have to code, which is most people, including me. So that's the idea. DOCN is the ticker. The earnings reaction is solid. That level is very telling. It just closed at that level today. And if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. It'll show up in the YouTube posts. I'll post it once a month. And if you want to make sure you get these videos, even if YouTube cancels this channel, which I don't think they're really going to do, but they want to make sure that the channels are prudent with how we present information. So head over to free.stockscommunity.com for that. And if you want one-on-one help, try out Stocks Community for $25. See you in the next one. Good luck.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.